Hello everyone and welcome to the Property Podcast. It's Rob B with Rob D and this is episode 291. Now last week we gave you the beginner's guide to commercial property and Rob and I pretty much topped out on our knowledge there. But don't worry, this week we've got Phil Stewardson in, super landlord, to help us and you become experts at commercial property.
Yes, welcome to the Property Podcast once again, where every Thursday morning property investors come together to get informed and inspired. And what a lot of information we've got for you today. And thanks to our guest Phil, you'll definitely find today's episode inspirational. And as well as that, stick around to the end where we've got a cracking hub extra for you as well.
A big thanks to someone on Twitter this week for our news story. Ashley tweeted Rob and I, house prices rise fastest in Northwest, Rob Dix and Rob Bence. Can I borrow that crystal ball of yours when you're done with it? Now, I thanked Ashley and pointed out that it's just simple economic cycles and not our genius that allows us to predict these things. But I did also comment that it's still nice to be right. And Rob, we seem to have picked a news story that highlights us being right.
Funny that, never done that before. So the story is that annual growth in the Northwest was 5.6% in the year to July, which was the highest anywhere in the country. And the biggest fall was in London, where prices fell by 0.7% year on year. So that's the regional picture. But thanks to HomeTrack, we've got a breakdown of how it looks by city as well. And not surprisingly, a city in the Northwest is leading the pack there. So prices in Liverpool are up 7.5% over the last year, which is pretty impressive stuff. Second place goes to Glasgow at 7.2%. And Rob, in third place, a city that's been up there a lot this year, which is Nottingham at 6.9%.
Yeah, Nottingham doing very well. One to watch, I think, but more on that in our predictions show at the end of the year. Rob and I are just dusting off the crystal ball, getting prepared for that show. So thanks, Ashley, who tweeted us this news story. And if you want to connect with Rob and I on Twitter, you can do so very easy at Rob Dix and at Rob Bence. Nice and simple. Say hello and we'll say hello back. Back in episode 278, we spoke with super landlord Phil Stewardson, and he took us through his journey as a property investor. And a fascinating one it is because Phil's been in the game for a long time now with his brother, and they've amassed a property portfolio of over 160 properties. And a big chunk of that portfolio is made up of commercial property. So who better than Phil to help us become experts at commercial property? So last week we looked at the beginner's guide to commercial property, and this week Phil has kindly stepped in to help us all become experts in commercial property.
So Phil, it's great to have you on the podcast again. Thank you so much for coming back. To start with, can you run us through the different types of commercial property that you've been involved with? Because people talk about commercial property, but obviously there's lots of different subtypes that make up that market.
Yeah, sure. Right. Starting from the very beginning, the first commercial property was a couple of shops together. They were next door to each other. It was an upholstery company that used one of the shops and the workshop behind to manufacture, and the other as a retail outlet. So we bought that, converted that, and it just went really well. It wasn't like everything. It was a case of having to move on. This was 2001-ish. Yeah, 2001. The market for houses was extremely tight. You know, Sarah Beanie had started her TV programmes, and every dinner party was talking about friends wanting to buy a house and do it up and either rent it or just flip it. In fact, the market's not dissimilar to what it is now. Very, very little supply and loads of people chasing them. Again, in that shop, those two shops we still own today, one is actually a house now, actually. So from there, we went on to pubs. I did our first pub in 2002, which was the first deal we did as a limited company. There were pubs closing down everywhere, 2002 to about 2005. So we did about a dozen pubs all around sort of the Black Country area, as it's known. So Stourbridge, Halesowen, around about 10 miles from Birmingham. And they were just amazing deals to do. Just incredible returns, really. Pubs always have a huge amount of square footage. And there's just so much potential. Our plan, in general, the one we always tried to work to, was a chip shop and a Chinese takeaway on the ground floor. and then between 2 and 5 flats above. Occasionally we varied from that. We always tried to stick with either the chip shop or the Chinese and something else, but we've got chip shop, convenience store, and we've done a number of convenience stores. They've always worked really well as well. Generally, pubs are in densely populated areas, a lot of square footage, a big car park, and I'm with a quite a good road presence. It's just, a no-brainer, really. And then we did one petrol station, which I think I've mentioned to you before, actually, was we do still have it. It has been a very, very difficult deal and posed loads and loads of issues with. We thought we'd bought a site that had been cleared when in fact it was still contaminated, which led to huge costs that we hadn't expected. But, we got there, we built 3 really nice shops on it. As I say, we still have those today. We've bought a library, a dental laboratory, a job centre, a doctor's surgery. Great thing about commercial, if it's a good spot on a busy road, there are so many potential uses. As a last resort, there's always the potential to knock it down and put something like a hand car wash on, or a car sales pitch, or a storage yard. I do love commercial. I particularly love mixed use, but I really enjoy commercial, and it's just, there are so many potential ideas that you can have for it. And that's great, because you've always got 2 or 3 backups. You obviously start with what's going to work the most to add the most value and produce the best return, but you can always work back. All of our commercial sites have worked incredibly well.
So many different types of deals, so many varied deals, Phil. But can you take us through your most recent deal and take us through the detail and how that came about and what you've done with it?
Okay, our most recent deal, we have had quite a big hitch with, was a pub that we wanted to make. It's on a very prominent corner position. Didn't exactly go to plan. We envisaged being in and out in 3 months, creating 2 shops and 2 flats, and then building an additional retail unit on the car park, because the car park and gardens to the pub are huge. We sorted out the electrics and all the utilities. Everything was fine. We got the 2 shops let way before the building was due to be finished, and they actually came in and did some of the work themselves so that they could get involved early on and make it a bit more bespoke for them. So we got a cafe in straight away and a tattoo studio, both of which are doing well. When we came to do the flats, we did the conversion, and with flats, we always try and avoid having gas. So we always have electric heating. We try and get, or we do get, the very efficient new electric heaters, but we just try and avoid gas in flats where we can when we're going up into the 2nd or 3rd floor. So we went with all electric, and it wasn't until we'd finished the flats, which is last October, that we realised there was a problem with the electrics. The shops were fine, but the flats only had 208 volts, which fortunately is the responsibility of the infrastructure supplier, and they have laid a new supply half a mile to overcome the problem. Otherwise, the cost would have been horrific. But it has meant that although the flats were finished last October, these electrical issues were only rectified in the last 10 days. So the project is now finally about to complete this week. But I mean, it's still offering a great return. It's just peeving that we've had to keep the flats empty for 9 months longer than they should have been, because we couldn't get anyone in them because they have no power. When these flats are occupied, it will be a great return of 15-16%. Really desirable units that will be hassle-free, we're sure.
I understand the appeal of commercial, and the fact that you can find so many creative uses for it is great. I think where I struggle with it is, and I think a lot of other people would be the same, is that with residential, it's pretty easy to work out how much you should be paying for a property in the first place and establishing what its value is. And then you can also have a pretty good idea of whether it's going to rent and who it's going to rent to. With commercial, it seems a lot more difficult to establish what something should be, especially if it's quite a unique building. And then to work out if it is going to be in demand, if you are going to be able to get that chip shop in or whatever it is you're aiming for. How do you overcome those challenges and be relatively certain that you're making a good investment?
Yeah, that is a very common problem, and it's also common with agents as well. Well, the potential is obviously in the eye of the beholder. So we always, with anything commercial, have at least 2 or 3 plans for what we want to do with it. But those yields and costs can vary massively. And a lot of it for us is down to gut feel. With this site that, as I say, we've just bought, we knew as a backup plan, because everything we buy is unconditional, because we don't want to give the game away as to what we want to do and potentially lose the property. So as a backup plan, we knew that we could drop the building and make a car wash there, or a car sales site, or even possibly sort of land bank it for housing. A lot of the sites that we buy, perhaps not now, but in a 3 to 5 year time frame, could easily be housing sites. We don't want to sit on it for that long. But if the worst situation arose, it wouldn't be the end of the earth. Someone would take it as a small lock-up yard and then just wait. But we then sort of take an average or work out what's the probability that we'll get a chip shop in here. Or in this case, what can we get? And we knew it's a very densely populated area with a lot of industrial and commercial property around it. It had been a cafe in the past. It closed as a pub about 15 years ago and been run as a cafe, although that closed about 5 years ago. And the owner had just lived in the flat above and kept everything else vacant. We knew there was a 90% chance that part of it would go as a cafe. And we felt there would be demand from a hairdresser or a beautician for the other unit. As it happened, we weren't a million miles away in that a tattooist came and instantly said, I want it. And we were 99% certain that would happen. So we based our offer on that and sort of worked back from our figures what rent we could achieve. We have guide prices for our area that we know per square foot what a chip shop will be as opposed to what a hairdresser or beautician will be. And obviously that's why our preference is always a chip shop or a Chinese, because their rent is probably somewhere between double and treble per square foot what it will be for a hairdresser's or beautician or whatever. So, but we knew a chip shop wasn't going to go there because there's one 300 yards away. So that wasn't going to work. So it was just a case of working back from that at our sort of general retail rent that we work to per square foot, less the cost of the work, less an element of profit, and that's our valuation.
Phil, do you see there being a big difference between residential and commercial in terms of the knowledge needed, legal requirements, finance, etc.? Or do you feel that there's enough similarities that if you do one well, you can move to the other? How do you see it?
I do always say to people that I do think starting in residential is a natural progression to move from residential to commercial. And I think most of the people that we know who do what we do, they generally started with residential and moved to commercial. There's fors and against really. In a lot of ways, commercial is a little easier and a little better. Certainly the managing of tenants can be easier. If you get a void, they are not always that quick to fill when you want to source, the right tenant who's going to be a good tenant. But if you have issues with, say, non-payment of rents, it is a lot quicker to get a commercial tenant out, much quicker. You can literally appoint a bailiff and they will go, at 24 hours notice. So things like that are better. I think what puts people off is, in a lot of cases, the numbers are bigger. The cost is a lot more than buying a house. In a lot of cases, the cost of redevelopments can be much, much higher. If you're going to want to create 4 to 6 units, it's a lot more than you're going to be looking at on the refurbishment of a terraced house, obviously. Every deal we've done, the yields are far, far greater. Some of the pub sites that we've done are yielding, well, I think our best one is 40%, where we got a massive increase in value as well, where we increased the value from the purchase price fourfold. But yeah, a lot of people are slightly scared of commercial. Everyone needs to live in a house, and if you have a house, chances are you're going to find a tenant quite quickly. Whereas there's not perceived to be that certainty. It's there aren't people queuing up as such for commercial units. If they're in the right spot, as I say, you will always get them away.
Last time we spoke, you said that you like doing what's unfashionable and what's out of fashion at the moment. So at the moment you're investing in retail because retail is very much out of fashion. So where do you see the future of commercial property being? What do you have your eye on next? And do you think it's going to get more difficult as the residential sector has, or will there always be good opportunities in commercial?
I think there will always be good opportunities in commercial. I am concerned in general, the whole market. I am worried we're going to get a bit of a slowdown, if I'm honest, but that's across housing and everything. I do worry where we're headed, particularly with house prices, I suppose, in that I think maintains artificially high because there's such a shortage. As we're not selling and as we're buying stuff that is providing great yields, it doesn't necessarily bother me. We've rode through the worst recession ever and a smaller recession before in the early 2000s. So, and in reality, we've always done better in a recession because there's always been a much greater supply. I think that will continue. Lots of commercial brownfield sites have gone for housing or are going for housing anyway, and that's definitely going to grow. There is a lot of commercial being taken out of the market. As I said earlier, I'm confident that in the small retail market that we aim for, we're not looking to do huge retail parks, like for the likes of Toys R Us and Next and people like that, where you think, God, where's that heading? We just think there will always be a market for your local hairdresser, pizza shop, beautician, tattooist, that type of thing, that there's always going to be that market for individual small niche traders. And we have a second sort of bite at the cherry in that we've got residential units above. So we've created something that we've bought that had one income, and we've made that into something with 3 or 4 different income streams. So I'm quite happy with that, and I think that will continue to work as a good sort of strategy.
Phil, what would you suggest as a starting point for someone who's established in residential property but wants to start out in commercial? What would those steps be?
I think if someone is established in residential, I think you just do exactly the same as you did to become established in your residential. And if you've made a success of that, you will have done the basic things well. And that's know the market you're buying into, know everything about it, and know what the demand is. I would never say to anyone, if they wanted to go into commercial, don't just drive 100 miles to a shop that you've seen on Rightmove that looks okay and it looks cheap. You've got to know what is the local situation in that area, what is required there, what has been there recently. Have there been other businesses that have been there and closed? Why did they close? Was it because there's absolutely no market there, or is there really high crime rate, or is there something that's stopping people shop in that area? And everything we buy, as I say, is in areas that we know inside out. So we saw these properties that we go to look at when they were last trading, and we saw how they were trading. So, is it now on the market because the guy wants to retire? Has it been run by the guy for 30 years and he's now 80 and just wants out? Or has it had 5 or 6 different owners in the last sort of 10 years, all doing different things, yet none of them have worked? It's exactly as it is with residential. With residential, I always say to people, find the demand and satisfy that demand. So in a way, it's exactly the same. What's lacking in that high street or in that location? What can you put there that's going to be in demand by the local population? And if you can satisfy that demand exactly the same as you do with housing, you'll always have a tenant and you'll have a well-performing investment.
Thank you so much, Phil. So much experience and knowledge. Rob and I really do feel like students again.
So Hub Extra coming up in just a minute. Don't go anywhere. But first, it's review time, where every week we take the time to acknowledge somebody who's kindly left us a review. So Rob, who's up this week?
A huge thanks to these following Hubbers. First up's Maureen, and Maureen says, no waffle, well, that's questionable, but she goes on to say, they give you just the information in a straightforward, easy to listen manner. The website is great. I just watched a 30-minute online course regarding tax. It's the best 30 minutes I've used. Fantastic. Well, thank you, Maureen. And the Null says, I've been listening to the podcast for 2 years now, alongside catching up with a few free courses, and I'm also a new subscriber to the magazine. I've been amazed at the breadth and depth of the material covered, and most of this is completely free. Living in a rural part of the UK, this has made me feel part of a wider community and spurred me on to move into the brave new world of becoming a landlord and stepping closer to a point where I'll have greater financial flexibility and hopefully the chance to make some bolder career decisions. Thank you, Robs, for being generous in the sharing of your wealth of experience and knowledge and making it available in such an accessible way. Well, thank you both for those reviews. And Rob, it's great to see that people are taking advantage of the courses that we've got on the Property Hub.
Definitely. If you haven't checked those out yet, then just go to thepropertyhub.net/courses. There's a whole variety waiting there for you. Okay, so time now for Hub Extra, where every week we try to squeeze in a little bit more, whether it's a resource, a quote, a tip, and we back it all up with the Hub Extra email, which you'll receive in your inbox on a Friday morning if you are a Property Hub member, which of course you should be, because that way you get the email and the courses and all the other great free stuff that we put out. This week, Rob, you've dug out a podcast recommendation for us, and this is one I'm really looking forward to listening to.
Yes, this is from Tim Ferriss. Now, you may have heard us mention a Tim Ferriss podcast before. Now, Rob and I don't listen every week because Tim's podcasts are pretty long. But what we will do is give each other a nudge when a good one comes along that we download and think, actually, this one's going to be worth a listen. And I'm pleased to say, for everyone listening to the Property Podcast, the one we're about to recommend is well worth a listen. Tim interviewed a gentleman called Howard Marks. Now, Howard Marks is the co-chairman and co-founder of Oaktree Capital Management, which is an investment firm with more than 120 billion in assets. So he plays around with a bit of money. He understands it, you'd like to think, and actually he's done very well. I really enjoyed this podcast because he talks about market cycles, something that is a real passion point for Rob and I, something we talk about quite a lot. What I thought was almost beautiful about the conversation is this guy knows so much about market cycles, about finance, about the world of money, yet his lessons were so simplistic. And actually, sometimes you may think, well, is it that simplistic? Are market cycles that predictable? And the answer is yes. What you should do in different stages of any market cycle is actually really simple. Whether you'll do it or not will be determined by how you feel emotionally. And in this episode, they get into that. They get into cycles. Howard talks about where he feels we are now in the economic cycle. All of it was really interesting. So it's well worth the investment of a couple of hours if you, like us, geek out over this stuff. So go and check it out. We'll link to it in our show notes, which you can find this week at thepropertyhub.net/commercial property 2.
So that's the Property Podcast for another week. Big thanks again to Phil Stewardson for joining us today. Hope you enjoyed this topic. What do you want us to cover next? Let us know what you'd like to hear on future episodes of the podcast. You can find us on Facebook, Twitter and Instagram. We're at Property Hub UK. And if you'd like to know what we get up to away from the podcast and how we might be able to help you with your own property journey, then join us for our next Discovery webinar. You can sign up at thepropertyhub.net/discover. For now, though, until we see you again for Ask Rob and Rob on Tuesday, have a great week. Bye-bye.
Bye-bye.